having the experience of working, on a number of deals with a number of sponsors, you can see there's a number of characteristics. So that's part of our kind of more extended due diligence points that we look at. Having bad experiences allowed me to define, say, okay, well, what and versus good experiences, and I was able to define, say, okay, this is definitely not something I want to, type of people I want to work with, and those are the people I want to work with. So that's my best, lesson learned.
Hi, Adam Gower here, founder of gowercrowd.com and host of this brand new podcast and YouTube show, The Allocator, a brand new way to finance real estate. My guest today is Philippe Schulligen, who is one of the co-founders of Boost Capital Group. Now, Philippe comes from a very interesting background. He doesn't really talk about it much until the very, very end of today's podcast. So be sure to listen, because we go, well, kind of technically off mic, but we keep recording. I guess we're on mic, but we finish the show and we keep recording. And Philippe has said, no problem, let me just share that with you. And I go through some tips for him about his website right at the very, very end of today's podcast. So stick around for that, because I bet a pound to a penny that what he has on his website, the way that he's got it structured, is probably very similar to yours. So what I tell him will apply to you too. All right. So if you've not already done so, subscribe to my newsletter, will you please, at gowercrowd.com. Hit the subscribe button and you will get weekly insights from my hundreds of years of experience in commercial real estate, as well as practical tips and guidance on how to raise capital, and also for investors, passive investors, what to look for when you are making investments. I'm going to be doing some investing myself as well, so I'll share some of those stories. All there at gowercrowd.com/subscribe, or just hit the subscribe button. Here he is. Let's get on with the show. Philippe Schulligen, Boost Capital Group. Philippe, nice to meet you. Bobby speaks so highly of you, so I've been looking forward to meeting you very much indeed. Let's start right at the top. In real estate, we'll get to your background in a minute, but in real estate, what do you do?
Well, so I'm running a fund. It's called Boost Capital Group. I'm the co-founder. And, basically in this fund, we're helping busy professionals, and business owners to, build their wealth through passive investments.
Okay, I'm just going to cut you off right there. I hear that all the time. How?
How?
Yeah, how? What do you actually do? Yes.
So let me give you a little bit of background. So to put things in context, if you allow me. I started, number of years ago, 8 years ago, actually, get interested in multifamily. My background is really, mechanical engineering. I worked in aerospace for a number of years. And then, I just wanted to grow my own wealth, right? And I got interested in real estate, then multifamily, particularly, and I got involved actively in a number of deals as a co-GP, like a real active co-GP. Found some deals, partnered with people, raised money, and since then I realized to build a company and become a good operator, that takes a lot of resources, and you really have to build a very large team, and eventually you have to take over, so not only asset management, obviously, but also property management. And at that point, I was thinking about myself and my friends and family, and our investors, and I'm like, how can I deliver a better service to them, better opportunities to them, without having them wait on me to get up to the point and become like a proficient, efficient operator. Because quite frankly, at the beginning was, let's say, a little bit rough. It was not optimal necessarily. And so I really leveraged that experience of having hands-on first-hand experience doing acquisitions and asset management and so on to really shift to selecting top operators in the market, top syndicators, and do due diligence, background check and whatnot on them, checking their track record, and then checking the deals that they offer. And then in turn, I'm offering these opportunities to my investors, and we're doing due diligence on these deals as well.
Fantastic. All right, good. So what is a top operator? What does that mean exactly?
So in our definition, we have defined a number of criteria, and they need to be at least 7 years of experience. They must have at least $2,000 under management. We prefer to have vertically integrated operators. And also, we're looking for 3 full cycle deals at the minimum. But it's like all these criteria, the longer the better. The more deals, the more doors, etc. The more track record, the better. But those are the minimums. And like I said, we're going to run, check their track record, do background check. We're going to check a number of elements regarding these operators to vet them. And then, after we're happy with them, we're going to look at whatever opportunities that they have that they allow us to participate to offer those opportunities to our investors.
Okay, 7 years, 2,000 doors, 3 full cycle deals. Why those criteria? Why are those your minimum hurdles? Where did you get those numbers from?
I think so. That's a good question, actually. It's just like through my own experience, doing this for a number of years and looking at other operators, how they were managing their operations and growing, because everybody has to start somewhere. But and there is at the very very beginning stage, this is not the stage you want to work with an operator necessarily, because they are setting up their operations and so on. So there's a little bit of more risk, I would say. Then when they are very extremely established, let's say they have 30 years of experience, usually they don't work with retail investors, for lack of better term. They're working with institutional money. So we're
Aha.
looking at this middle section here, the sweet spot for us, where they are established, they have a track record, but they are not at the institutional level yet.
Right. Okay.
So
So
this is the strike for us, the strike
got it.
zone.
All right. So first of all, I would like to let you know that there are plenty of sponsors who have decades of experience who would love to work with you and who have significant multi-cycle experience. So what it does, though, is it segues into my next question, which is what I think you mean, and that is, how do you make money?
Okay, another good question. So the way we make money is basically we're buying wholesale and we're selling retail, meaning that we have the ability to write a larger check. So we're taking several individual investors and smaller checks that we bundle together. And then we knock at the door of the sponsor, the expert sponsor, and we say, look, I can bring, $500,000 to your deal, $1 million, plus. What are the terms that you're going to offer to me that would allow me to make a little bit of money? Usually, most of the time, we're able to pass some of that to our investors, so they're doing better working with us. So not only they have the due diligence, they leverage our own experience, so basically like a third party looking at the operator, but also they do better if they invest with us compared that if they were investing directly with the sponsor.
Yeah, let me just ask you a question. If a multi-cycle 30-year sponsor was willing to do that with you, would you be interested in talking to them?
Of course,
Rather
yeah.
than a 7-year, you're talking
Of course.
2018. I mean, that's like the peak of the thing. Okay, so obviously the
It
answer is
was
yes.
no, it was before the peak actually. It was before the peak. And actually like if you think about it, since 17, 18, there's been one recession during COVID, and after that, there's been like interest rates going much higher, as you know, and really there were like two almost like black swan events, right? Because so COVID, like this unprecedented time frame where the business stopped basically, and a lot of tenants stopped paying their rent. So if you an operator was able to pass and in a good shape through that, that's really that's great, right? But and otherwise, I forgot how many, I think like 20 rate increase in interest rates that impacted the markets. And again, an operator who passed through that time frame, facing like strong headwinds, that's why we use the 7 years. But of course, the longer the better, because the more cycles they've experienced. So yeah, absolutely,
Better.
we're willing to work with as many experienced operators
Exactly.
as we can. And
Right.
actually, you mentioned Bobby earlier, and we're working with Bobby and his team. At Connected Capital, this kind of mastermind of fund managers,
Right.
where we do that work collectively of assessing sponsors and assessing their deals, because we're running like a 200-300 points checklist, so the amount of the workload is pretty
It's
uh,
intense.
it's pretty
Yeah.
intense. So we do that together, and it's good to very sharp people part of the group, and we give our feedback, and we work together. It's very, very interesting.
Philippe, so you talked about the negotiations that you have with sponsors. Can you give me some actual numbers, like just like so that I can understand what that looks like exactly? I mean, you can
Yeah,
mention a specific deal if you want, or just a case study. You
yeah,
know,
yeah, yeah,
yeah,
yeah. Just so, in a nutshell, let's say, just to give an idea, a sponsor is going to offer 80-20 to investors, right? 80% for the investors, 20% for the GP. That's what the retail investor would get. So what we negotiate with the sponsor, I say, okay, we know we come with a larger check and so on. And the sponsor, they're going to give us like a 90-10. So they keep 10%, they give us 90. And in turn, we're going to, of this 90, we'll take a cut, and we'll give the rest to the investors. So if you look at the deal level, the investors, they may end up with, let's say, 81% of the deal. We'll take 9%, and the sponsor will get 10.
and
But
what about on the preferred return as well? Do you negotiate that, or is that
uh,
not so
on
much?
the yeah, that depends. So sometimes we get like an extra point on the preferred return. So we would keep maybe 1%,
And
something like that.
that's your compensation, is it,
That
Philippe?
that's
That's what you,
right. That's
yeah.
right. Yeah. Yeah. And also sometimes, and it's really, without going too much into the weeds, because there are many flavors and
Yeah.
combinations. But also, typically we're going to charge a due diligence fee upfront, and that's something, it depends. Some things sometimes we negotiate with the sponsor, or there is enough margin for us to charge that, on the overall investment to our investors. But still, at the end of the day, our goal is always to provide better returns to our investors, compared, to them going directly to the sponsor.
And who pays the due diligence fee? I missed that.
So sometimes that's a discussion we have with the sponsor. So sometimes they give us a little bit from their side, and sometimes we're going to charge the investor their initial investment. So and it's a few percent. It's like 1 to 3% maximum
Of what?
of the amount invested.
So if you raise $1 million, that's a $2,000 or $3,000 fee that the investors would pay.
Well, that would be if it's $1 million, would be 30,000.
So
Like
sorry, 30,000. Right, right. Okay.
3%, 3%. Yeah.
3%, 3,000. Okay.
Yeah.
Okay. And just curious. So you've been in this for 7 years. I know, actually, you've been in.
8 years.
Yeah, I noticed 2020 though on your LinkedIn profile. It says you started Boost in 2020. Is
Well,
that
but
are you
I
22
started
actually
the
22?
real
Yeah.
estate. I started part-time the real estate prior to that, technically.
Right, right.
Yeah.
And
Yeah.
Boost
So I
started
started
in
in 17.
right, and so but Boost when you started as an allocator, how long have you been doing that, Philippe?
Uh, to Boost, we started 3 years ago.
Okay.
That
And so
that
how
particular entity.
and how
Yeah.
much have you raised since then in equity?
So far, we passed the $2 million mark.
Wow,
Actually.
very good. That's very and so how do you find investors?
That's a good question. Well, so initially friends and family,
Hmm.
um, and after that referrals from the friends and family, and after that we try to be active on social media and so on. So like I said, besides the friends and family and their referrals, um, we try to be active on social media and whatnot, which it's a little I think harder in my opinion this path. I'm running co-hosting a meetup here in Atlanta, so
Hmm.
that's an opportunity to meet to meet investors. Um, and my partners, they do the same. They run their own. Have like one of my partners. He has his own Facebook group focused on pharma professionals. And this is how we're trying to grow our community, and doing some YouTube videos and webinars and that type of thing.
Tell you
That's
what, it's
that's
not easy, Philippe. Just as an FYI, it's all I do. Is I help sponsors primarily raise capital, but I'm focusing on helping folk like you to raise capital as well. Just FYI, it's not easy. My clients have raised probably close to $1 billion with $25,000 minimums over the
Oh,
last,
wow.
I don't know, 5, 6 years. I don't know how long have I been doing it? 8 years or so. So it is something that I can definitely help you with. And I'll look at your website. I've got a question for you. So, a couple of things. So there are some things that I can actually show you. We could do this separately. We won't do it now because that's not the point of the podcast. That will help you upgrade your website, like some really easy wins for you. All right, maybe at the end I'll give you a couple of pointers, just a couple of things that you
Yeah.
could do. Quick
Yeah, well, that'd
wins,
be
just like
very
move the
interesting.
needle instantly. But I do have a question for you. So as I scan down your page, your homepage, and I see this a lot. I'm just curious to understand a bit more about it. You've raised $2 million, which is a good number. You've only been in the business for, you said 3 years, 2022 you started. But I see a line here that says 4,000 apartments, $400 million portfolio, and 21 properties. Connect the dots for me between those numbers?
Yeah. So, and actually, like, yeah, the we did include, our all the partners' experience, even prior to, because we all started like before, we came together to do Boost. But the portfolio of all the assets combined together, the value of that portfolio is like the $400 million. Now, we're not claiming that that's we invested, like all the capital in those apartments, and that's something that we are very clear on that with our investors. But that's at the end of the day, we are involved, or we've been involved in $400 million worth of transactions, right? And the $4,000, we looked at the deals and ran the due diligence as I mentioned earlier.
Right.
So that's our experience.
How do you actually invest in deals as well, Philippe, in the
Of
deals that
course.
you do? So how do you
Yeah.
calculate how much you invest?
We're trying to be at around 10% of the money that we would bring from our investors. So yeah, us, like the fund managers, or my partners and I were trying to put about 10%. Uh,
Trained. Who trained you?
was that?
You said you were trained by who?
Oh no, I'm sorry, I didn't say that.
Oh, what did you say? I thought you said we were trained to invest 10%.
No, my partners and I,
Yeah.
we are investing 10% of
Okay.
of yeah, of what we're raising. Yeah.
I misheard you. I thought you said you were trained to do that. Uh,
Sorry, like my French
we
accent is.
both have strange accents on the show. So, right, so Philippe, let me ask something. There's a lot of capital allocators out there, as you well know.
Mhm.
What makes you stand out amongst them? How do you separate yourself as you compete for investors and how do you do that? What's your unique value proposition?
Yes, that's something, we've worked with my partners actually quite a bit over the past few months to, take a step back and assess that and say, what makes us different? Because indeed there are many, many capital allocators, and it's an industry that is made of probably hundreds, if not thousands, of smaller companies like us at the end of the day. And our approach is really, number one, a very rigorous due diligence. That's very important. Like we spoke about that earlier, but that would be like our foundation for whatever we do, because like I mentioned, you know what we want to do is really help investors, and the best way to help investors, like I mentioned, is like for us to work with sponsors, more experienced shops out there, right? And from that standpoint, what we leverage our experience to by analyzing the sponsors, analyzing the deals, and that's our due diligence process. Two 300 points checklist that we run. So that's the number one. Number two, what we do, what we offer to our investors is really, again, putting ourselves in their shoes and in co-investing. Um, the risk mitigation is very important as well. And for that, the best way to take care of that is to have a diversified portfolio, right? Like the classic investment strategy. But, and it goes beyond. So our idea is, for instance, if you look at multifamily, you're looking at different sponsors in different markets, right? So that's a way to diversify, but we're also exploring other asset classes. We just introduced self-storage recently, and we're
Ah,
going to introduce more asset classes in the future. And finally, our third pillar, if you will, is going to be like a tailored investment strategy. So giving the opportunity for the investors to pick and choose what they want to invest in, right? Because um, while we are going to do this due diligence on the different asset classes, on the different deals we're going to bring to the table, they may be comfortable, they may not be comfortable. So they'll pick and choose what they want, and to fit their own goals. There are some. Actually, we are looking at introducing a debt offering that is purely cash flow.
mm,
It's going to be like 8, 10% maybe cash on cash return, but um, there's no other returns. You know, that's it. There's no appreciation, there's no value add or whatever. Right. And there's some investors that can say, no, you know, I want my money to work harder. I want to put my money into the, you know, a value add type of deal where, you know, I can 2x my returns, my investment in 5 years. Right. I don't want a boring, you know, between quotes, 8 to 10% year over year.
Let me ask you
So
something. So I was actually trying to get at something else a little bit,
mhm.
and it's interesting your answer because I see this a lot as well. Like, the first thing that you answered when I said, "What do you do?" You said, "I help my investors or I help professionals, earn passive income and whatever, build wealth." Okay, so everybody says the same thing. So how do you differentiate yourself? And that's kind of rhetorical. It's getting to my question actually, is you personally, your unique value proposition is what separates you, right? You've not mentioned it, and you don't have to if you don't want to, but your background and your day job are really unreal. Oh, you did actually said you're an engineer, right? Is something, right?
I used to, yeah.
Used to. That's incredible that you have those skills. I mean, you're a highly skilled professional in a in an industry completely removed from real estate, but I bet there are all kinds of lessons that you learned and skills that you learned in that career that you bring into real estate. Can you give me an example of something that you learned in a prior life that applies to real estate?
Yeah, I mean, I think one thing that helped me a lot is for instance, you know, like the time I've spent on project management and you know being able to organize you know a team and you know look at the you know track the tasks and whatnot. So that's definitely a big advantage for me. You know, when I transition progressively to this new career. And another, you know, I think the analysis, you know, not being afraid to look at an Excel sheet, an underwriting model, and being able to understand how it works and you know poking it around. That's another skill that I bring to the table. And I would say, especially for having worked in the aerospace industry, you know it's an industry where you know risk management is a key, right? I mean,
Is fairly high priority, I would
very high
imagine.
priority. So that's
Right.
something that's always you know something that we have in mind when we're looking at deals. You know, how do we mitigate risks? And you know, are there reserves there? You know, what about the stress test of the different elements of the deals, you know, such as occupancy and whatnot. So yeah, that would be probably my three uh, personal things that I bring to the table. However, you know, my partners, we all
Mm.
have very different backgrounds. So like I mentioned, one of them is in the pharmaceutical industry. You know, he has an MBA, and the third one is you know he has a military background working for the government. So we have you know very diverse backgrounds, all three of us,
Okay.
and we came together. So we're kind of we're looking, um, you know what brought us together. You know, I think is you know what like I mentioned earlier. It's like we want to help people like us, basically,
Mm.
right? Like the busy professionals, you know, business owners, and so on, and we want to help them achieve you know, like financial peace of mind, right?
Uh, so here's the so while you were talking, you probably see my eyes jumping around and opening screens and looking at stuff. What I was looking at was looking at your website, a little bit more details. I was also looking at your LinkedIn profile. Philippe, I'm telling you, your background and expertise is completely invisible right? You don't talk about it at all. And yet, the connection that you can make in terms of the skills that you bring to real estate are really the differentiator. When you talk about doing due diligence, there's a Japanese word. You speak French, I speak Japanese, right? So whatever. But there's a Japanese word, doesn't really have a literal translation. Atarimae. In English, it probably just means goes without saying. We do due diligence. Well, of course you do due diligence. Who doesn't do due diligence? What separates
Well,
you, though?
I know some people who don't.
But
So
what separates you is you and your uniqueness. You just said three pharmaceuticals. Oh my goodness. That's a highly technical field. Military and government. Okay, so red tape and rule following, and in your critical risk management. I mean, these are incredible skills that simply do not come across on your website or in anything that you say. Those are the things that make you different. And that's, I think, this is just, I mean, you're one of the first people I've really articulated this to, but I've been thinking about it a lot. I see the same thing on LinkedIn all the time. Everybody says the same thing, is out, and everyone's post is this earn passive income and build wealth with real estate. They all say it in different ways. What's interesting is how you extract from your personal experiences lessons that you apply. Because when you do that, you actually attract other people, other investors who have the same experience. And you've got three of you with unique experiences. I mean, you can't be better placed to be talking about these things, because then, like I say, other investors who have the same experience in the same industries as the three of you, it resonates for them. I understand that. I could do that. I don't have the time. I'm going to invest with these guys because I know they know what they're doing. They think the way I think. Anyway, that's a separate topic.
yeah, that's very interesting. Yeah, no, I appreciate the
Yeah, and I'm going to pitch something as well. Just going to tell you, if I didn't already, I have a mastermind coming up in February where I'm going to be specifically focused on capital allocators, because this is something I see. Everybody says the exact same thing, makes all the same mistakes, and yet you are unique, and the opportunities for you, particularly in 2025, are so huge. You want to be doubling down on your true excellence and your true expertise in order to be able to grow your business. All right, let me leave you with, if you don't mind, so we're up at the kind of getting to the end. So I have 5 sign-off questions. Oh my goodness, can you believe I've got 5? It sounds like such a huge list, doesn't it? But they're only quick. So they're quick, what I call rapid fire questions. So let me ask you this. Actually, I'm going to add another one. Of the deals that you've done so far, how are they performing?
Some are performing better than other, and again, it's like talking about the experience of doing that, being a co-GP, active co-GP, and quite frankly, that like some of the early deals, they're doing so, to say the least. But otherwise, since we started Boost, and we really raised the bar of what passed through us and we passed to our investors. Those deals they're doing well. They're doing as expected.
Better than the ones that aren't.
Yeah.
Right.
Yep.
All right. So what's been the hardest lesson you've learned? One of the things that you said was the first ones were a bit less. So what's been the hardest? These are my last 5 questions. What has been the hardest lesson?
It's hard to raise money. It's hard. The marketing part. I mean, we have like one of us in the 3 partners has a background in marketing. So thank God, it's like our latest addition as a partner. But being more from a technical background, it's not obvious to do marketing and raise money in general.
Philippe, please join me in February. I mean, it's all about marketing and raising money. But my question was, what have you learned in real estate? What lessons from investing in real estate has been the hardest one? You said that some of your early deals were rough. Some of the deals you've syndicated not doing as you thought. What are the lessons you've learned from that so far?
So I think there's what the lesson is, what are the characteristics of a good sponsor? What to look for, right? Really. So, you know, having the experience of working, on a number of deals with a number of sponsors, you can see there's a number of characteristics. So that's part of our kind of more extended due diligence points that we look at. I gave like the rough highlights, but that helped us, and I think that's the most. Having bad experiences allowed me to define, say, okay, well, what and versus good experiences, and I was able to define, say, okay, this is definitely not something I want to, type of people I want to work with, and those are the people I want to work with. So that's my best, lesson learned.
Third question. So, what do you think makes for a successful capital allocator? What characteristics in today's environment?
That's a good question. I guess if I know, we would have raised much more. Now I think it's spending. You have to be consistent and build your base and attract people. I think that's the marketing. All these things. There's nothing specific really. And probably I think at the end of the day, it's like giving or offering opportunities to our investors that are performing. I think at the end of the day, like deals work, people are going to come to us, right? So I think it's a virtuous cycle there.
If you could go back in time to before you even started investing in real estate, so 8 years ago, what advice would you give yourself?
I think it's understand where the sponsors, the different sponsors, where they're coming from, what's their background, how they work, and what kind of product they have delivered, and the way of working, etc. um and certainly I would say, like, to become a full-blown operator, it's much harder than I initially expected. So, that's again, that's the full-blown, well-established operator. That's the people you want to work with. It's like the beginner. It's good for friends and family. Maybe you want to help people start, but at the end of the day, I mean, it's life savings that we're talking about, and we have to provide a quality product to our investors.
Hmm.
That's for me, that's the most important thing.
Philippe, last question. So, what is the biggest misconception do you think there is about the capital allocator world and industry?
I think the biggest misconception is for capital allocators who are doing that seriously, and we spoke a lot about due diligence. Um, there's a lot of work. There's a lot of work because we're going to look at a lot of sponsors, we're going to look at a lot of deals, and then we'll do a lot of due diligence on a number of deals. I think over in 2024, we must have looked at 60 deals maybe, and we offered four of them to our investors. So um, there's a lot of work, and sometimes I think we're doing ourselves, we're doing a poor job communicating that to our investors. And they could be an impression is like, oh, it's like, oh, look at these guys, they're making this money, but there's work. It's not passive for us.
That was you took the word out of my mouth. There is really no such thing as passive real estate investing as long as it's done right. Philippe Schulligen with a hard G.
Schulligen, yep.
Schulligen. Philippe Schulligen, Boost
Yes.
Capital Group. What an enormous pleasure to meet you. Thanks for joining me on the show today.
Yeah, thank you, Adam. Thank you for having me. And yeah, let me just share my information if you don't mind.
Oh, sorry. Yes, of course. I cut you off, and you've got a thing coming up, training. Sorry,
Right,
Philippe.
do. So,
Okay, so go
if
ahead.
people,
Oh,
I
yeah.
have a little, if people who are watching, I have a QR code here. They can, look at my bio on our website. Otherwise, for people who are listening, they can email me at philippe@boostmycapital.com. So it spells PHILIPPE at boostmycapital.com in one word. And especially for your listeners and people who watch the podcast on YouTube, we have recently released a multifamily due diligence course, and we offer that course for free to your listeners, Adam, and they can access this course at boostmycapital.com/course, and they can use the coupon code P01, letter P, and then
P01. All right, there it is. All right. Well,
P01.
that's an incredible value. I'm looking at that page now. That's really kind of generous of you, and I shall do everything I can to remember to put those in the show notes. Philippe, if you notice when I build the page that I forgot to put that on the show notes page, let me know and I'll add it. All right.
Will do.
Please, now I really mean that. Just as soon as Kay didn't do it, so I'll put it on that page. Right, no problem. All right, well, thanks. It's really a pleasure to meet you. Thanks.
Yeah, thank you, Adam. Nice to meet you too.
All right, that was Philippe Schulligen of Boost Capital Group. Thanks for joining me, Philippe. I really enjoyed meeting you. Thank you for joining me. It's really interesting. I enjoyed our after podcast chat as well. Thanks for letting me share that with everybody. And thanks for your time today. And dear viewers, thank you for your time as well. Really appreciate it. I hope you enjoyed it as much as I did. I hope you got a little bit out of that last little candid part that I did with Philippe as well. And if you've not done so already, subscribe to my newsletter, gowercrowd.com/subscribe. And as soon as you get the first email, if you've got any questions or would like some pointers on your own website, just reply and ask me. I'd be happy to answer. All right, that's all I've got for you this week. Until next time, it's Adam Gower signing off.